Good evening, wizards, and welcome to episode 11 of the Crypto Wizard podcast. Now, again, a very exciting time in the cryptocurrency market right now with people going crazy. People are now fighting. I'm seeing the battles all over social media, which is one of my favorite points in the market because we've hit that huge indecisive period after what has been an unstoppable bullish rally in the market overall. From the altcoins to BTC, we have seen some magnificent growth over the past 2 weeks, and BTC in particular, I think, was the biggest shell shocker for many people. Obviously, besides the likes of BNB, several altcoins that have seen magnificent growth throughout 2019 overall, the market has had a fairly good run. But the question is still arising. Are we going to continue? Are we going to remain idle? Or are we going to absolutely reverse to the downside? And right now, I do believe, as we've been covering for 2 weeks in advance now, the signs are beginning to slowly point towards a potential downside movement. And the whole purpose of this podcast in particular is the fact that we've been practicing these patience. As you've probably been able to tell, the podcast and the Wizard Wednesdays have been slowly building up to what could be a potential huge reversal in the market and preparing us for the worst, but also preparing us for how to even catch the counteractive move should the bullish momentum continue. So what's really spawned the idea of this podcast is the topic of patience. Patience is a virtue, and why we've been waiting on weekly candle closures, which is why it's perfect that these Sunday podcasts actually end and pretty much dictate and work around the Sunday candle closures as well. So what we're looking at right now, you may remember BTC in particular, I've been holding off for trades for almost 2 weeks straight, which is a very hard thing for me to do. And I can imagine for many of you as well, to actually sit back in the market despite seeing all of this crazy movement. I prefer not to get involved in the market, especially when you start seeing huge bullish euphoria, because the truth is, when you start seeing a huge bullish run up, there are two ways you can do this. It's very easy to make money in a bullish market, and that is why we have long-term portfolios. That is why I hold physical coins. But when it comes to the likes of these temporary surges, you are essentially trying to predict that it will just continue rising, because in the crypto market, when we start seeing a bullish run up or a bullish surge or an increase in bullish activity, you never really know when it's going to end, because it can be very sporadic, it can be erratic, and there's no clear telltale sign on intraday movements in the market. So when it comes to intraday, especially for bullish or bearish, very rapid movements in the market, it's not really wise to be timing or trying to catch long or short opportunity, because for all you know, it could come to a very dramatic end and it could reverse in the complete other way, whether that's going up or down. But when it comes to the likes of a bullish market, the reason I can actually take a step back is because I'm actually doing a bit of both. Alongside margin trading, I have my long-term portfolio and my physical coins growing in the background. So that means if a short opportunity was to not work out, or if I was to simply sit on the sidelines for 2 weeks, I can actually rest assured that my crypto is still growing in value even when I am not trading in the market. So there's no need to over hedge or get over leveraged in the market when you know the physical coins are doing the work for you. So you can very easily just sit back, relax, and wait for the market to start preventing you from losing, and even presenting some good opportunities as well. And after 2 weeks of waiting, the 2 weekly candle closures, we are finally starting to get some clarity on what could actually be happening in the market right now. And I think we're finally seeing that $8,200. Well, I mean, if we go to the weekly time frame now, it's 2 weeks in a row of pure rejections, and I'm waiting at the current time of speaking. It's 5:30 p.m. here in the UK. I'm waiting for that weekly candle closure around 1 a.m. to really give us a clue indicator as to what could be happening over the next week. Now, considering this current weekly candle, the way it's formed, it has shown a very significant downside push towards the 7,400 region, all the way from $8,200. And bearing in mind, the candle closed from the prior week exactly at $8,200 as well. So this week hasn't even attempted to break higher. So we are starting to see the telltale signs. Although we're now back at around $8,000, we've seen throughout the week a very dramatic explosion where the bulls finally gave way and the bears took over and absolutely melted price. Now, pulling this back up now, as I've covered in the prior podcast and in the Wizard Wednesdays, the psychology I see behind this right now and what's dictating me to believe we are going to fall further is when you see price spike lower throughout the early stages of the week, it shows that the bulls have now lost power and the bears are starting to take over. So when you start seeing a pullback towards the initial opening price of the weekly candle, it tells me the bulls are trying to push price back up because they've now found a sufficient weakness in the market. They're trying to push price back to at least their initial entry price to get out and avoid any form of loss whatsoever. Many people would rather cut their losses short or suffer a break even than go into a drastic loss when the market starts showing telltale reversal signs. On top of that, we have the lower high as well forming on the weekly. So there are many different factors leading into this potential strategy. But as you've seen, after 2 weeks of waiting, we finally sniped the first intraday move from around $8,200 upon the second retest. And Lord behold, we ended up melting all the way from around $8,200 back down to around $7,400. So this weekly candle's initial move all the way to the downside, we actually called that in on Twitter, in the Telegram, even in the podcast, it was semi-predicted. So we actually covered that first move and then we saw a drastic pullback to retest that region, which is now showing to prove itself to push lower once again. So if you've entered that trade that I provided around $8,100, you should already be in a very significant profit. And in Forex terms, we're already looking at around 80 pips on that movement. So things are looking pretty significant. I'm pretty excited to see what could be commencing from here. But overall, in terms of FX, or if you're using margin trading or pips, we could be looking at an 800 pip move overall. So things are looking great. I'm very excited to see how this is going to be playing out. We've now pushed below on BTC, finally broke that $7,950 zone, pulled back above. We're now retesting $8,000, which I could believe could be the final frontier, minus a potential spike to $8,100 to actually plummet us back down to $7,400 and lower. So the whole purpose of this podcast is based around the fact that margin trading, this should prove now, despite every single person saying buy, we've actually made more money by catching profitable short opportunities than those who have decided to buy at all-time highs and FOMO in. The whole of crypto Twitter, everybody, as you know, we've been battling those trolls who are just telling us to buy. They're telling us it's a bull run. It's not going to end. It will just continue going up. But applying some logic and some key levels and some technical analysis, the key signs are now telltale. We're seeing some very strong resistance around $8,200 to around $8,000 for the first time during this whole bullish run up. So it's a very clear and key indicator that price will begin, at least to some extent, pull back to at least $7,400 to $7,000. And from there, we can dictate if it really is going to break or not. So I am keeping this all into consideration. We have caught an entry from practically the utmost high of this current move. So great entries across the board, stop losses already in profit and trades already in profit as well. So whether you're in break even or not, you have won a good trade. And it just goes to show, by simply avoiding FOMO and sitting back and letting the market finally present the opportunities to you, you can then catch very profitable trades. Whereas if we simply kept trying to find the bottoms of tops of a market which was not showing clear levels of support or resistance, we're simply gambling and taking a 50-50 chance. And that is all that is really going on in the market right now. And it does show a lack of education in terms of who we are trusting in these spaces. So we need to make a stand, we need to be more cautious, and we need to be careful even when, let's just say, the market begins falling or rising, whether these people have hundreds of thousands of followers, whether they have 2 or 3 followers, we cannot let people influence our decisions. So what I'm going to mold this whole podcast around is the psychological implications of margin trading, what many of you may be suffering from in the beginning stages, because now we're back in that stage in the market right now where we're on our second trade, already running in profit. We could be back into the swing of consecutive movements in the market. So now that we're in synchronization, if this move comes through and we start hitting $7,400, it will be much easier for all of us to predict where the market is going next. So I think some psychological mentorship in terms of day trading is essential, and even investing overall. Again, I've just gone on Twitter. I'll have a look at this now. I tweeted this. I started around 7 years ago in Forex when I was 14 years old, which is very true. I met a very wealthy uncle, went to his house. I'd never seen a house like it in my life. I come from very humble beginnings. I have not seen a house like this ever before. And the uncle kind of gave my dad a bunch of CDs. When my dad asked him what he'd done, it was DVDs, sorry. And they were just Forex DVDs. My dad was too busy. He never had time to do them. Passed them on to me. And by age of 14, I was already getting involved. And I've got followers, very loyal followers, and even fans or whoever you may be, even if we are just a community as a whole. I've got people starting at even 11 years old and Forex at 13. It's crazy to see what some people are doing by the age of 16. And CBFX, one of my, I guess you could say one of the best people in the wizard community for overall right now who interacts consistently. The guy himself has said he started it at 11 years old, Forex at 13, and he's now 16 and still going. And it's just crazy to see how young people are starting to get involved in this market. But it doesn't mean you have to start that young to be prepared or to get good. It just means when I was starting at that age, I never had the guidance, I never had the experience, there were no mentors around. We just had DVDs and books, and to be honest with you, I do not feel books are that sufficient because all they cover is technical analysis. They're good to, again, with the Wizard platform, combining this in conjunction with lessons and all these other features that I'll be implementing, it's a very different story. But you cannot look at these as a golden ticket. You cannot look at books, DVDs, or anything as a golden ticket if you are not applying that same dedication 24/7 like a full-time job to your trading. You have to be treating this like a full-time job, and you have to be very serious. You have to, the same way in a business, you'll be studying everything, you'll be calculating your profits and losses, your balance sheets. The same has to go for trading. You need to be alert, you need to be studying, you need to be studying the competition. The same way you're looking at your competitors in a business to see what they're doing next, you need to look at the market and the candlesticks and try and understand what could be unfolding next. So again, as I covered in the tweet, every trap, emotion, mistake or failure, believe me, I've done it. And one of the biggest was watching in disbelief as correct calls were still ending up as losers for me. And again, but why? It was because I had no idea what I was doing. And this is the brutal truth. The truth is, when it comes to trading and calls, even if this was my problem in the beginning, I'll run this through. When I first started Forex and I started trading, and I was trading on demo, flooding the demo account with £50,000 or £100,000 and just making £20,000 by over leveraging, getting lucky, beginner's luck was kicking in. I was just sitting there making £20,000 on a demo trade. And I remember just going to my dad, Dad, I've made £20,000. Look, it's fake, but it's £20,000. I said, imagine when I go live, I'm gonna be making £20,000. I'm like, we are rich, we are sorted, this is it, it's over, the family is sorted. And obviously he gets excited because he doesn't know. And then I realized maybe everyone is like, why is it this easy? If like, what? How am I making $20,000 just like that, or £20,000? So get more excited, you have a few losing streaks, next thing you know, the demo account's gone. But it's fine because you reload another account. 50 to 100 accounts later, I'm still going. Now one of the accounts has flipped to $1 million because I just kept over leveraging. Then I've lost it all again. Well, I thought, you know what? Seeing as it's this easy to make $1 million, I'll just put in a few hundred or a few thousand. And again, I didn't really have much money at this time. I was just working normal jobs, but saving viciously to ensure I had some money to invest. Every paycheck would simply go to just funding a new Forex account. And what was happening was, I was basically following the demo principles. And all I was saying to myself is, well, guess what? I'll just flip it next time, but then I'll just stop and just take out my wins before I blow it all. But in reality, once you put real money into the account, what you are not prepared for is the reality check and the punch and the repeated punches in the face from when reality hits you and tells you that actually this is no walk in the park, this is no dream. This is not what you see on Instagram when people are holding cash to their ears or phones to their ears in suits and tuxedos, when in reality they cannot trade and catch a single 5-pip movement. And that is what causes such a massive negative impact on this industry. It's because we're flooding now with people who are just con artists and sleazy salesmen promoting the trading dream and the trading lifestyle, when in reality they probably haven't even seen over £5,000-10,000 themselves in their entire lives, but they're promoting this wealthy lifestyle using rental cars. It's all bullshit, to be honest with you. And in the beginning you get caught into those traps, and one of my biggest traps was joining signal groups or listening to people without knowing what I was doing. This is the biggest misconception in trading. The biggest consistent replies, every single person that's replied to this tweet has basically told me that they are having the same issue that I brought up. All of the new people who get started, they are seeing everyone around them win, and it drives you crazy. You're looking around you and you see these signal groups, or you even see someone like me, for example, posting wins, or you see my followers posting wins, and it might be driving you crazy because you're seeing those trades. You're even taking the same trade sometimes, but you're not getting the wins. You're losing. Your stop loss is being hit. You're getting margin called. How is that happening when everyone else around you is winning the same trades? And that's because you are not prepared for trading yet, and you are jumping in on the deep end, and you are relying purely off somebody else's analysis to make a decision and to hopefully succeed in a trade. But the truth is, no matter what I give you, I could give you a perfect trade pip to pip, but the reality is, if you are not prepared, if you do not understand the ideologies and the principles and concepts of stop losses, take profits, margin, risk management, I could give you the most perfect setups for a whole year, every single day, I could give you 100 setups a day, where if I was to do that, and let's just say someone made £1 billion, you as a beginner could even end up in minus £1 billion if you were to keep going with unlimited capital. And that's because you're not prepared and you do not understand that even if you were to enter and execute, people have different ways to manage trades. And when you are trading, it's what many people do not realize in the Telegram. Someone said to me yesterday, all he does is switch bias. He's indecisive. He doesn't know what to do. That's actually incorrect. That's because the crypto market is so volatile that unlike the likes of Forex or stocks, we cannot just simply swing trade, enter an entry and get out. This market can post the most beautiful technical analysis and then invalidate that in one single hourly candle. And as a newcomer, you are not prepared for that. You are not willing to understand risk management. You are not willing to calculate how much you are risking per trade. You are not actually projecting how many pips you're going to have on a stop loss, how many pips your take profit will be. You're not calculating the risk to reward. You're not calculating how much is in your account. You're not taking into consideration potential reversal points where the market might spike. Are you entering all of your position in one go? Are you entering triple what you should be doing in one go? Are you scaling in orders? There are so many different concepts. Stop loss adjustment, take profit adjustment, entering and exiting positions early or late. There are so many different factors. It's not just about, this is the craziest concept, it's not just the trade. The trade doesn't matter. The entries, of course, I try and get those optimal entries to give everyone a much better opportunity. But the reality is, I'm very good at getting those entries now, but that's just one piece of the puzzle. The main puzzle overall is trade management, your stop losses, your take profits, getting out early, changing bias when there's a potential threat. You need to be prepared for the absolute worst, and this market can do the absolute worst in many circumstances. So it's up to you as a trader who may not be experienced yet to not follow those calls. You need to go off your own back, whether it's me or anyone else in this industry or any other industry. You need to be using this in line with your own analysis and never feel pressured to jump in on board and start trying to trade straight away. Put the money aside. The whole purpose of trading is not to try and focus on the money, it's to focus on the skill set, because once you start building that skill set with real life analysis, always start on demo, but to be honest with you, you will never gain that real experience until you at least go live. Even if that means £50, £20, £10, do not focus on the money. Put a small amount into that account when it's your hard-earned money on the line. The money you've had to slave for, work for, whether that's labor or any other job, an office job, no matter what it is, even if it's a part-time hustle, the money you have had to work and graft for, when you're putting that on the line and your decisions are what is driving a potential profit or loss, it can drive you crazy. Trading will bring out your inner demons. It will expose a side to yourself that you've never experienced before, and it's beautiful because it makes you a much bigger character over time if you can endure the losses, if you can endure the pain, the failure, the losses, and you can push through. And I've said this to many people. I've been doing this now for 7 years. I'm 24 years old. I was doing this from nearly 14 years old, maybe longer. I don't even know when, but it was around 14 years old. I'm 24 now, and it took me almost 5 years to be profitable. I was making profits, I was making good money, but to remain consistently profitable in the way I am now, and to actually even have excuse me, I could have 7 losses in a row but still end the month profitable. And that's one of the biggest sins that people fail to realize. So it's, for example, you have to realize in my positions, I'm under immense pressure every single day. Now, although I treat this job as a hobby, and I do this every day anyway, this is just essentially what I do every day being projected to all of you lot. But you have to realize there's a certain pressure. I have 21,000 people in a Telegram group watching my every move, waiting to see me fail. Not every single person. The Wizard community as a collective is absolutely beautiful, but we are looking at thousands, tens of thousands of people every single day across social media. If you combine all the platforms together, we're looking at over 100,000 people watching me on a consistent basis, waiting to see me just fail, waiting to see me mess up, waiting to see something go wrong. And that's an immense pressure to have. And to even get to the stage where I was confident enough to go onto a public platform and have people put their trust in me to provide continuous and consistent calls, it's a very tough job to do. And I've had to battle that hurdle. Not only have I had to battle the hurdle of trading, I've had to battle the hurdle of going public and allowing myself and exposing myself by putting my balls on the line every single day. And people do not realize this is a massive risk I put myself under every single day. There's a jeopardy here where I'm actually allowing people to trust me. And again, it's been working magnificently, thank God, because I've been studying this for so long. But you have to realize there is an immense pressure that comes with it, and every psychological implication. Even when I have a losing streak, I have to pre-program people. That's why I've given so much away for free in these podcasts, because I want people to understand that whether you have a losing streak, whether you have a winning streak, we have to treat it the same. And that's why I've been trying to embed this mindset of the bullish momentum. Everyone's screaming bullish. I'm trying to scream, do not do anything until the confirmation is clear. I was saying it's likely going to reverse, but I wasn't saying do anything until 2 weeks later. And we actually waited 2 weeks to execute a trade whilst everybody else was screaming bullish, bullish, bullish. If this reverses now, every single person that was screaming that over the past few weeks, which is 95% of the majority, they are going to suffer a major fate, and we are going to be the only ones prepared. And it's a continuous pattern in the market where I have to put my balls on the line. Testicular fortitude is like no other right now. I'm very proud to say balls of steel in this market situation. But all it takes is a bit of patience. You have to ignore the backlash. And again, you have to realize, good example now, the trade's moved into profit. The first thing I said, move the stop loss down, secure yourself. If it reverses against you, you've either broken out in a little profit, you've broken out at break even, enough to cover those spreads and commissions. And then if it goes a bit higher, you simply re-enter at a better price. You have to be covering yourself 24/7. And as a beginner trader, the biggest mistake you'll fall into is trying to catch that dream trade, the euphoric, legendary trade, the golden goose of all trades, the huge trade that falls several thousands of dollars or several hundreds of pips. And you're trying to catch those huge moves, which in the crypto market can be achieved, but you'll have to be willing to ride the waves out. You'll have to be willing to change bias in any given moment. I'm not changing bias because I'm indecisive. I'm changing bias every now and then because I need to save everyone money. I can very easily, the problem is when you're trading crypto, you have to be rapid. So that means I will have to frequently sometimes close a position out, switch bias, widen my stop loss, adjust the trade, take out a bit of profit. That means with every single crazy and hectic volatile movement I'm doing, which has to be volatile in line with a volatile market. You're not trading stocks and Forex where only occasionally you get some volatility upon a news announcement. We are suffering from volatility, and we're basically going from illiquidity to liquidity on a very frequent basis. So you have to be as erratic as the crypto market is to stay in tune and actually continuously profit. So that's one of the biggest mistakes you'll see many inexperienced people do or say. They will look at you and say, well, you're just constantly changing bias, you don't know what you're doing. But that's just because they do not know how to actually move in line with the market and adjust. And that will be a big problem you'll face in the beginning. You may look at traders and think, well, 1 minute, you're going from long to short, long to short, long to short. But as long as you are staying in line with your overall long-term focus, any of the intraday moves in between, you can very easily and consistently profit from. So take that into consideration. Do not be scared to be open-minded and look into a whole new light of trading. That's why I can't wait for the Wizard platform, because I'm showing you guys a completely new light of trading that's never really been seen before. Many people have not traded. No, to be honest with you, no one's traded the way I will be showing you in the Wizard platform. It's never been done. I've never seen someone do it, and it's going to introduce a whole new wave of sniper wizard traders. That it's going to be a community where many people will not be able to understand how we're doing things or why we're doing it, but it will show you a bit of a deeper mindset into how to read the charts against how the majority read it. So that's one of the biggest hurdles as well, I would say, by far. And another key point as well would of course be risk management. You have to be careful with how much money you are risking. Sometimes you get people, or in the beginning, you can be bitter. You can be very bitter in the beginning because you see everyone around you making money. Someone posts a trade and you end up losing money, and you blame everyone else but yourself. But the truth is, when sometimes I get messages, a good example is this, and I can always tell who's new by the messages they send me. I lost $700 on this trade, or I lost $5,000, but I've lost all my savings. But the truth is, nobody told you to risk $5,000 on a trade. I never say buy or sell either, and that's the truth. Nobody is telling you to risk $5,000. I actually tell you to do the exact opposite and risk nothing. Risk minimal and get the strategy perfected. When you, in the beginning, you will do this. You will fall into the traps. You will blow accounts many times over, I assure you. No matter how calculated you are, when you get cocky in the beginning, you have a little winning streak, you are more likely than not going to blow an account to some extent when you get a little too ahead of yourself and decide now it's time to over leverage and really get this winning trade. You start thinking, I've picked it up, I've got the hang of this is easy. Why can't anyone else do this like me? I'm just winning trades left, right, center. Let's just up the lot sizes by triple. Let's just increase our risk by triple. Bang. You have a losing trade, you lose all your capital you've made profit from over the past few days, weeks or months. You're back to square one. You may even be in a worse position than you were before. You have to be calculated and take responsibility for your actions. And that was me in the beginning. I was going signal groups, Telegram groups, you name it, losing trades, and I was blaming them. I'm going, your calls are shit. You guys are awful. You don't know how to trade. I'm losing. I've only lost money. But the truth is, those guys were winning the trades. So were their followers that had experience. But because I was new, I didn't understand what the hell was going on. And I was just simply over leveraging, trying to make quick flips. And it's not about quick flips, because we're fortunate in the cryptocurrency market where the moves are so large. An average trade in the forex market that you would close out from, the crypto market would likely do that double or triple anyway. So you've already made a much more significant amount of money over a shorter space of time. So you have to put all of these relative factors into consideration and just realize that the market is bigger than you. We cannot control the market. We are simply here to move in synchronization with the market. And again, it goes for stop losses as well. Stop losses are not the devil. They are not the enemy. I do not view stop losses as a failure. I view them the same as my take profits. And I covered this on Twitter. They are simply tools to aid you and help you get out of the market during your most irrational points in time. Not only do you have to premeditate your pips to the stop loss and your pips that take profit, you need to calculate how many pips and what your lot sizes or trade size would be to accommodate for that certain stop loss and take profit size. The take profit is minor. I do not care about my take profit, to be honest with you, because the market, when it moves in your favor, it will always move drastically in your favor and you'll be able to catch a very big move. Your main focus at all times should be your stop loss, whether it's tight or whether it's a massive stop loss. Your trade size or your lot size, your position size per increment of movement or dollar movement should be calculated to fall in line with your risk management. That means if you have a $5,000 account, do not risk more than 1 to 2%. Even 3% is pushing it. There are times where, to be honest with you, I can throw in a 5 to 10% risk on a trade because I'm very calculated. I can willingly take that risk, especially if I've had a good year or a good month. There are certain circumstances where I'll be teaching you. And again, you know me, I do not really care for people's opinions when they try and talk about me or troll me. I'll willingly say it. There are times where I can openly trade over 10% risk on a single trade, where it has to fall into certain criterias and certain specific and strict confluences to execute such a trade. It's not a consistent thing. The problem is it's become an old wives' tale where every single person says you must not risk more than 1 to 3%. But the problem is, and the truth is, if you are saying that on a professional level, you are simply just not too confident in your own trading and you are not too good at what you do. The truth is, even when you are risking potentially, let's just say 10% plus of a trade in very strict and certain criteria, if you know how to manage it, you will never lose the full amount anyway. And that's why I'm dynamic. That's why you can get in and out sometimes. There are so many different ways to play it. I'm going to be teaching you all of these strategies very soon. I'm sick and tired of the majority of this market just falling under the same traps. We use market cap as an indicator of what is a good or bad investment, and we actually use the market cap to cap where a certain crypto could be in the future, which is absolute bullshit. There is no limitation on what a cryptocurrency can be in the future, as Bitcoin is proven, as XRP, Ethereum, Litecoin, Bitcoin Cash, Bitcoin SV, BNB. These are all examples that have proved that there is no market cap example to limit what a coin's potential can be. We are stuck in a market where old wives' tales and crypto cartoon people seem to have this ulterior, egotistical, they seem to think they're better than everybody else, I've noticed. And the problem is, these people have hundreds of thousands of followers and they are leading a horrific example to newcomers in the market who are following them, and they are just shilling coins, pump and dumps, moon language, moon talk, Lambo talk. It's all good to have Lambo talk. I actually think it's healthy to have Lamborghini talks and all this moon Tesla talk, because it helps motivate you. It helps you realize if your dream car is a Lamborghini, and you want a Lamborghini, you want a Tesla, by all means, that talk should be good because it motivates you. No matter what your motivation is, whether it's materialistic or not, it should be your motivation. You need to find something in the market to motivate you. But I do not agree with people simply resuscitate information. It's like Chinese whiskers. You shouldn't risk more than 1 to 3%. I will say this now, you can more than willingly risk up to 5-10% on a trade, but you have to be trading for at least several years and you need to have a consistent streak. You need to understand absolutely everything down to the T. And that means if you have not traded before and you're only getting into margin trading, do not even risk more than 2% per trade. Even that is pushing it. I would say 1.5%. Only after 2 to 3 years in the market of consistency, even 2 to 3 years, I would say maybe even longer, then can you start projecting further risk in the market, only in certain criteria and after certain strategies. It's not the same. as entering a 1 to 3 risk trade and entering a 10% trade. The whole trade management, the whole dynamics, the stop losses, absolutely everything where you're trading from is different. It's not simply waiting a candle closure and entering. There are so many crazy criteria that fall into it. I'm going to show you that very soon because it can be a great way in the crypto market to really leverage your gains. And I'm not talking BitMEX 50 to 100 times margin. I'm actually talking much more calculated margin trades using brokers, for example, Forex brokers, stock brokers, whatever they could be. Not using BitMEX because it's very risky going down that avenue and you're more likely than not going to suffer a very bad fate. But guys, overall, just do not view stop losses as the demon. Do not view them as a loss. That is one of the biggest things in this market. And that's why I say there can be pressure. I've realized this over the long term. When I first started, I was so scared of having my stop loss hit because I had all these people watching me. Now I have over 100,000 people watching me, and I make it very clear. I do not care for wins. I do not care for losses. As a newcomer, I'm trying to mold you into this mindset from early because you do not have the same pressure as me. So you can actually focus much more on trading versus worrying about what people are thinking about you. You can actually keep your trades to yourself and you do not need to expose them to a public level where you'll be criticized or ridiculed. So I think it's really good and a crucial point in time for many of you who are joining this wizard community, jumping on board, you're making money, going level-headed and prepare you for the best because realistically, stop loss and take profit, they are designed to take you out the market at the points where you are most irrational. As long as you are calculating the risk and reward, a stop loss when you're nearing your stop loss, or let's just say you didn't have a stop loss and you've set a specific region. Let's say BTC right now, it's at $7,900. It's now going up to $8,200 and your stop loss is at $8,300, but you don't have a stop loss. You've just told yourself you will get out at $8,300. What happens if price starts getting closer and you just keep saying, actually no, I'll wait a bit more, I'll wait for it to go up to 8,400, it's going to reverse anyway. Or even if you do have a stop loss, you keep dragging it higher and higher because you're going, do you know what, it'll come back, it'll come back, it'll come back, but it never does. Only in rare circumstances does it ever come back. So it's one of those things that stops you. As long as you are calculated and you treat it as gospel, a stop loss is there to simply take you out the market. It's not there to prove you've lost. It's there to prove that your decision did not work, your trade did not go to plan. You've calculated your risk. So what's the real loss here? You've premeditated and preempted in advance. If you've preempted that you will lose $200 on this trade and it falls into your risk management, then there's no issue. It's worked out perfectly for you. You calculated that, you understood, and you knew that would be the consequences. It's like going to a casino and knowing that you have £500 in your pocket, you've actually said to yourself, I'm only going to spend £500 today. Even if you lose it all, you may be a little bit sad, but at least you know you didn't lose £1,000 when knowing you were about to go and take out an extra £2,000-3,000 and go and spend that as well. But you kept to your limits, you kept in your requirements, and you went home at least mutual, and that's how it should be. If you're risking certain criteria, let's just say 1 to 2%, by all means you could lose 10 trades in a row. Your account hasn't suffered that drastically, and then all it takes, as long as you are in line with that risk management, all it takes is a few good wins to counteract those losses. And that's why always make sure the wins we make, once we make a huge significant move in the market, what you should always be doing from there is taking trades with much less risk. Do not try and continue a continuous flip spree. Make a big trade, you make a big win, go back to even less risk. So if you were to eat into that capital by losses, you would only be eating into it in a very small portion. So I'm hoping this has helped. Hopefully it's been a bit more insightful, provided a bit more of an insight into how I treat the market, how I literally do not give a fuck about what anyone says. I never have and never will, because the minute you start caring or looking at what other people are doing or saying, it's going to impact your trading. And I see it continuously on Twitter. So many people come for me, they send shots, or there's Twitter people, again, there's crypto Twitter cartoons are my best example because they really annoy me. I just hate all of them. They're just so annoying. And they will literally be like, no, it's going up, it's going down. And my answer is, maybe it is, I don't care. I've predicted and I believe with my bias it's going to go up or down. Whatever your opinion is, that's good for you. I'm here to make money. I'm here to go off my own analysis. And what will happen in the beginning as a newcomer as well is if you enter it, let's just say a long or short position, but then you see people on Twitter or Instagram or someone, your friend messages you going, yo, BTC is going up, but you've just gone short. It may impact you and it can counteract every single thing you've seen in that market. Excuse me, could be absolutely correct. I lost my voice there. Could be absolutely correct, but then all you do is see what someone else says and then it just changes everything. You look at the market and you look at the candlesticks and you go, actually, maybe it is a long opportunity. Maybe I was seeing it wrong. I mean, they must know what they're doing if they're that confident. But the truth is, these people are not confident. They do not know what they're doing. They're gambling, and that's the best way to do it. If you actually start taking note of how consistently these people online are actually getting trades wrong, or they're calling incorrect biases, or they're just jumping on bandwagons, it should give you a very good reason to stay clear. So, guys, I'm going to wrap it up on that note. I think I'm having I don't know what's going on with my voice here, but it just broke down on me. I literally just malfunctioned. But I wanted to just give a much more deeper insight into trading. Whether you're new, whether you're experienced, whether you've been here for only a little bit and you're just getting involved now, or whether you're, I don't know, whoever you are in this trading world, there's going to be a lot more margin trading opportunities once the market starts stabilizing itself again. We're 2 trades deep within a week. Both are out. One of them's closed out in huge profit. The other one's now running in profit, risk-free. It's looking like we're back on track to continuously get back on that movement again after a nice 2-week break to let the market do what it wants to do. So it's what's most important for me is you guys are in synchronization with me. We are moving together as a wizard unit and as a collective. So guys, hope you've enjoyed the podcast, and I hope more importantly it's helped all of you see a much more deeper insight into the life of margin trading, and how if you actually just stop moving with the herd, stop looking at what they do, stop caring what people think, your life will not only change drastically, but so will your trading. This helps you overall. I'm not here to just provide crypto or trading information. I'm here to give you life advice that can help you in all aspects of your career and lifestyle as well. So guys, Mr. Wizard is over and out, and I'll be seeing you in the Telegram very shortly with further updates once again.